Hey, what's up everyone? Welcome back to another Elliott Wave analysis. In today's video, we're going to be talking about Bitcoin's price action on the shorter time frames and continue our last analysis on how we can be working for higher levels, as that was the original narrative. So with that being said, I think the leading diagonal idea we discussed, as you can see here, I can confidently say that it's now complete, which means that our wave 1 is now also complete. And we're now working for a corrective phase for this wave 2. Now, there are a few ways we can actually draw out this diagonal here, this move up here. And this idea here, I just have the wave 1 labeled at the highest point of the range, as it does give us a little bit more wiggle room to adjust our counts as necessary if in the case we do come back down into these levels over here, more notably the 61.8 golden Fibonacci level. But just in case, if you don't know, a leading diagonal is a special type of motive wave that appears in a wave 1 position of a larger impulse. As you can see here, this 5-wave move, this wave 1 can be a leading diagonal itself, where it's built as corrective waves. But unlike standard impulses, leading diagonals have overlapping wave structures where wave 4 typically enters the price territory of wave 1, and they typically form some kind of wedge shape. Most of you probably know this as some kind of rising wedge, right? So they consist of 5 waves in itself, but unlike that classic impulse, waves 1, 3, and 5 can either be impulses or corrective structures, typically zigzags, and most importantly, waves 2 and 4 are also always corrective. So this pattern usually signals that a strong trend is beginning, but due to its overlapping nature, it reflects market hesitation or struggle at the early stage of this trend. And that is the key word here, ladies and gentlemen. It's a trend beginning or a trend setter wave. And that usually happens especially if you're able to identify a larger termination point of the preceding waves, meaning that we have been trying to assume that this wave 2 is now complete and we have a protected low. So we can confidently say that this is some kind of leading diagonal, even with these corrective overlaps, that it may not be a part of a different corrective structure that brings us to lower levels. Instead, it's working for that trend like I mentioned. So that being said, we can adjust this diagonal however you'd like. We have different termination points. I think we can also adjust this wave 1 to be labeled here, and we may be working in some kind of flat idea. I think I actually have that scenario drawn out. Yeah, we have, as you can see here, we have the possibility of a wave 1, 2, 3 starting here instead of that being into a wave 1 here. And that would be the diagonal in itself, where instead of this move here is the wave 1, we have it labeled here. And this would be a price extreme for some kind of B wave as a flat structure. Now, it really doesn't matter at this point. I think we can say that this is an A, B, some kind of 1, 2, 3, 4, 5 going into that level over here. We can even say that this wave 2 is now complete as some kind of running flat, where we now have a protected low over here. But it's so close to invalidation, I think that we actually just might come down and retest these levels one more time. And that's the reason why I have this idea here, where we can adjust it and have a little bit more wiggle room, give ourselves a little bit more time in terms of how to adjust this move here, because we do have an impulse down over here. And then we can also say that this B wave, however it wants to play out, this can also be turning into a normal simple style corrective variation of an ABC or a complex WXY of some sort. Then again, the most important thing here, although we did meet that minimum expectation of a 23.6%, we don't have a completed 3-wave move here. It's pretty obvious that we also want to be retesting at least at 38.2%. And then more notably, if this level comes down and gets supported at the 61.8%, that's going to be a very important level for the bulls to secure. So the ultimate confirmation for this scenario is that we need to be breaking this previous high over here at the $88,000 levels. And I think that we will break those levels, especially if we're going to be assuming that a wave 3 is going to be coming into play. I think there won't be any hesitation at these levels over here. I think there's just more hesitation at these levels over here, and that's why we're seeing these corrective overlaps. So that buildup of that accumulation for that wave 2 that we should be theoretically seeing for the couple next weeks, who knows, maybe a couple days, it just depends on how fast this wave 2 plays out. Then we should be looking for that wave 3 to the upside, and then we should start retesting these higher levels of these support trend resistance levels. So with that being said, once we do get that wave 3, 4, 5 respectively, we should be looking for a larger degree of wave 1, and then we should be looking for that wave 2 pullback. That should be a larger pullback, because this is just the beginning or a minor wave of some sort on the macro degree. And if you pull up the macro, you can see this is exactly how we have been discussing on how this is going to be fitted into a larger expansion phase for this wave 3. So as you can see, it's all just kind of stacking on each other with these shorter time frames. It's also now going to be completing for that larger picture for that wave 3. So if you're currently positioned, since you're over here, we're only a blimp within the galaxy, and we're just creating that first leg, wave 1, 2, 3, 4, 5, a wave 1 here, 2, 3, 4, and then 5, that's how we're going to be completing the overall picture for this wave theory, or at least assuming that's going to be the idea. Because I do still believe that we are working for higher levels. I think that this is more indicative of a triple style correction, meaning that since we do have so many corrective overlaps, it's more indicative of a corrective style move. Then we can safely assume that this is part of a corrective structure of some kind of wave 1, 2, instead of seeing this as a completed trend where we adjust this fifth wave over here and say that the trend is now complete. And this move here, although we met the depth of a possible actionary wave of a wave 1, I just don't think that we are working for a bearish, larger bearish trend. Now, the reason why I say that is because if we look at the bearish scenario also does suggest that we may be working for higher levels no matter what. So this is a reason why I'm actually quite bullish on the shorter time frames, because even if we're working in a bearish, larger bear market move, this move here down, if you're treating this as some kind of actionary wave, more typically known as the leading diagonal itself going into a wave A, this is going to be a wave B, and we still need to be retesting higher levels, as I do think that we have residual liquidity around the $90,000 to the $100,000 levels. And once we do actually reach those levels, we'll get a fair reassessment on whether this is going to be a rejection zone or a continuation for that wave 3 that we have been discussing. But right now, there are no immediate danger in terms of the shorter time frame price action, meaning that these levels should be protected even with the most bearish scenario, as you see here. So I think that once we get this corrective style pullback for either a wave 2 or a wave B, and then once we work for a wave C or a wave 3 to the upside, I think that's when we can actually get a fair reassessment for the bears, as they do have a chance at these levels and attack the bulls that where we can get rejected. So for now, I would have to organize it where the shorter time frames, we're looking for a shorter correction, shorter time frame correction, as I do think that we have the completed motive wave of a 5-wave structure going into a wave A as a leading diagonal. We're now just kind of figuring out how this range is going to be secured, and then we should be working for another kind of partner like for this move over here as a minimum expectation, and that should lead us into at least a 50% or the 61.8% level, and then we can make that reassessment like I mentioned. So as you can see, all the scenarios are still leaning towards the upside, even with the most bearish scenario. And I think that's the reason why we can confidently say that we're still working for higher levels. I do think that the $98,000 to the $100,000 levels are going to be a very interesting level for a level of either rejection or a continuation to the upside. But if I had a gun pointed to my head right now, I think we are going to be working for higher levels, as I don't see any immediate danger within the price action. I would say most of the bad news has been priced in, especially with the Trump tariff news. I think we're just kind of battling out between the bulls and the bears with any kind of residual news that is coming out. And I think right now we did get a small dump because of the S&P 500, but that's to be expected right now, right? We were expecting this wave 1 to be terminated. We should be looking for a wave 2 pullback of some sort. Boom, out of here. And again, if we do just move out of here now, it would be a little bit odd, but it's possible, because right now we do have the possibility of adjusting that diagonal like I mentioned, and we can have some kind of expanded flat, or a running flat rather, since we didn't break this low. This running flat, although it's rare, we can be completing a move to the upside, but it's already close to invalidation anyways. And if we're going to work for an expanded flat idea, we still need to complete a 5-way move to the downside. But at that point, it's still going to be the same idea as this idea here. So as you can see, as long as we stay above these major Fibonacci levels, we're still going to be working for that expansion phase. So that's my overall interpretation of the Bitcoin price action on the shorter time frames. Hopefully that was helpful, ladies and gentlemen. Thank you very much for joining. I'll see you guys in the next video. Bye-bye.